You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is time once again to dive bravely, some might say foolishly, into the world of futures. Yes, it is time once again for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks are binging. Network continues to grow. This show just celebrating its 1-year anniversary just a couple of weeks ago. Wild to think this show, I should say, has already been running for a year. To me, it is still the new addition to the network. Of course, we launched 2 new shows since then, including the European Market Brief, which you heard earlier this week. If you're hanging out on the Pro, On Demand should be coming to you soon. And then, of course, every day after the closing bell, coming at you now with the Hot Options Report. Yet another reason why, if you're listening to the Futures Rundown, A, we love you, and B, you should be listening to the full network. Over a dozen shows coming at you outside of this one. And of course, if you're ready to pull the trigger to go above and beyond, the optionsinsider.com/pro is the place to go to learn more. You get awesome pro Q&As like the Great Unusual Activity deep dive into research we did last week. Which ones are effective, which ones are not. All sorts of fun. Did that on the pro Q&A last week. Live streams, early access to a lot of great stuff, giveaways, and of course, options oddities to wrap up every week talking about weird and wild trading going on in the world of options. A lot of great stuff. The optionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Futures Rundown this week, I am pleased to welcome back on Morad Askar, the founder over there at EdgeClear. Morad, welcome back to the Futures Rundown, sir.
Thanks for having me on, Mark.
It's been a little bit since we chatted with you, since the heady days of July when we were all so young and innocent, Morad. Who can even remember back that far now?
With all that's going on, that's true.
Yeah, a lot going on. So let's get to it, listeners, as we dive right back into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the trading pit, the portion of the show where we break down what's lighting up the futures markets this week. And we have to start, Morad, with the elephant in the room. We were just talking about this on our last show, Options Bootcamp. It is inescapable right now. Of course, as we are recording this, listeners, the first day of October here in 2025. I know a lot of you coming later on down the road. The beginning, the official start of spooky season, listeners. Things are getting a little spooky out there with the government shutting down out there as well. You would never know it, Morad, if you just pulled up your screens today and fired up, let's say, I don't know, your Market Watch or your brokerage platform, whatever the case may be, because you'd be seeing a lot of green in the equity markets and a lot of red on the vol screen, which is kind of the polar opposite of what you'd expect on a day when we are officially shut down in the market. So let's start there, Morad. What do you make of what the market has given us on this day when we are now shut down yet again, sir?
So, I'm an active professional trader, and I can tell you this, especially in futures. You come in with an expectation, and the expectation this morning, given where we were opening, I do this morning YouTube stream for followers called the Trader Bite. But, in it, I was very confident about the fact that the market's likely to be locked into where we were, especially in the indices, and it's likely to just chop around. And man, I couldn't have been more wrong. This thing just kind of picked up and ripped up this morning, with the S&Ps and the NASDAQ kind of leading the way to almost to all-time highs. So to me, it's really hard to, make a technical argument for what's going on here, except that we just ended a quarter September 30th yesterday, and here's the money flows into Q4 here. To me, that appears to be the only thing. I don't see anything on a news feed. I don't see anything macro-wise that might support this, and not even technical. I mean, I'm a technical, quantitative type trader, and I wouldn't have, and I didn't put money on a big rally this morning. So it's definitely a head scratcher.
Yeah, it's a wild one. My co-host on my previous show said, if you're initiating new long S&P right now, you deserve to lose money. Those were his words. So yeah, this is very much a hated / head scratching rally out there today. We saw a lot of people going into this announcement, loading up on some upside in VIX as well. And vol, that's certainly not coming to pass either. So a lot of things going on that are kind of interesting, head scratching. We'll get to, I think, VIX a little bit later on in the show, listeners. The vol space obviously has a lot going on right now, but that's, of course, top of mind. I have our movers and shakers for this week I'll get to in a second there, Morad. But outside of the madness that is today, sir, what is catching your eye in the futures market this week?
This week, we have NatGas kind of gapping up and running away today and the last couple of days. It's been really, really strong. You have it in your movers as the top dog, and it's a gap and go type of situation in there. Probably a macro play. And the other one, of course, the metals. You cannot ignore the metals. GC, gold, silver, platinum. These things are really primary inflation hedges, and it's actually pretty scary seeing that gold is pushing $3,900 currently, and it's just it's telling you what the underlying of gold is the U.S. dollar, and if gold is going up, what does that say about the dollar? So with the government shutdown and this current situation is just more risk on the table. When risk is on the table, people move to commodities where the future space is most valuable.
Yeah, we have a lot going on in gold. I think we'll get there in a little bit as well. Let's break down this week's upside movers as well. Morad kind of just hit on some of them. Number 5 to the upside, to the green on our screens this week, listeners. Kicking it off in dairy this week with cash-settled cheese. I can't eat it. I'm lactose intolerant, Morad, but maybe you can have some. It's a little more expensive this week, up nearly 5%, 4.88% to the upside. Followed by number 4, another thing I can't enjoy, Class 3 milk, up 5.08% this week. Number 3, platinum. This one's been on a good run, continuing that run, up about 5.33% this week. Number 2, our good buddy Uncle Mike's favorite holding, it's silver, up 7.7% this week. And the big dog, as Morad alluded to, NatGas. We were just talking about NatGas on TWIFO last week and what's going on, and just with Dan and how it looked like there was a lot of action on those 2 3/4 puts going out. And I think it was about 14 days of the time frame out there. And they were a pretty small dollar. I think they were 6 cents, somewhere along those lines. So it was a pretty cheap flyer. They were roughly about $0.50 out of the money. It was an interesting debate on whether those were worth the flyer. And I think some people in our pro chat were more bullish NatGas out there. It seems like that was the right play this week. Morad, do you do a lot of NatGas trading? What do you make of this, a little bit of upside move in NatGas? Are you buying this, or are you fading it a little bit?
No, it's coming into what I would consider to be balanced for the year. The most accepted price for the year so far is about $3.40. It's trading at $4.69. Remember, natural gas came way, way down. If you go back in time, it used to trade in a $10 range and has come off on a weekly chart. You'll see basically a head and shoulders formation there. We've been kind of sitting sideways since 2023. So this is a bit of a fade play here, in my opinion. The likely resistance is right above us at about $3.50. So it's got a little bit to go before a fade is considered. I don't think this is a runaway. There's just nothing has changed in that product in terms of supply, demand, Russia, Europe. Not seeing it.
Yeah, it's an interesting one out here. I don't think we were looking for this much of an upside move on TWIFO last week. So some of our folks in our pro chat will be happy. I think they were long some NatGas futures out there. So a good week for them as we go to the downside, listeners. And NatGas is kind of the only energy getting a lift this week. Everything else kind of getting smacked. Number 5 to the dark side, listeners. We've got RBOB off 3.75%. Number 4, we got Brent off 4.44%. You know, if Brent's number 4, WTI can't be far behind. And in this case, it's number 3, listeners, off nearly 5%, about 4.92% this week. Number 2, back to the consumables. It is cocoa, off about 5.29%. And our old pal OJ, just when you think OJ can't give up the ghost anymore, it sells off another 6.4% on the week. So interesting stuff. Interesting divergence in the energy complex, Morad, where we have NatGas running away with it and the rest of it getting taken to the woodshed, Morad.
Right, with OJ trading at about around down 50% or something on the year. It's definitely taken a beating. It's below 50% in this consolidation pattern. To me, OJ has more downside. So enjoy your orange juice today. Enjoy even more of it maybe tomorrow when it's even cheaper.
Yeah, I mean, coffee keeps getting more expensive, Morad, but I guess if you offset that with a lot of OJ, I guess you're doing all right now.
Yeah, you can't get your caffeine out of OJ. That's the only problem.
That is true. That is true. They need a caffeinated OJ. Are you a big WTI guy out here? And what do you make of these levels and this most recent downward move we're seeing, Morad?
Yeah, so this is a key product for me. I mean, this thing was really interesting. It's spiked up. It's been all over the place. It put in a high this year at about $80, currently trading at about $62. And it's been in this it's been testing both extremes. It went from 80 to a high of 78. Recently 70, and then just last week it pushed $66, and it's just lower highs, equal lows into the 61.50 area, and it just looks very bearish to me. Short term, technically, it could very easily, in my opinion, test the 58 area going forward. So crude is getting cheaper, and of course that's helped by the announcement by OPEC Plus yesterday to increase production by 500,000 barrels per day for the next 3 months. It caused a big slide down about 2% just yesterday.
Interesting. 58. I know for a long time people were fixated on that 65 level, Morad. Obviously we are well below that now, and you're saying 60 not even doing it for you out here. You're looking at 58 as the next level. That's interesting stuff out here, listeners. Of course, if you want to follow along and keep an eye on a lot of these commodities, listeners, you should be listening to our This Week in Futures options show, very much the sister program to this, and B, checking out those free reports we give you right now. If you pull that up, you'd see WTI hanging out when we started the show, right around a little bit shy of the 62 strike, and putting up a fair amount, a whole week's worth of options paper already 452,000 contracts. So a pretty active week. I got a feeling we're going to be talking about WTI on TWIFO tomorrow, listeners. As we keep on rolling out to the top 10, what is lighting up the tape out there today, listeners, as we're coming into the start of the show? Is it a pretty active day? You know, we've been using this barometer for a while of 300,000 contracts. Below that, not quite the most active of days. Above that, you're starting to get pretty active. Today, of course, the first day, question mark, of this government shutdown. We have no idea, obviously, how long this is going to last. It could be resolved as we're recording this, or it could drag on for a while. And we're seeing that reflected in some of the volume numbers here today 375,000 contracts on the tape to break into the top 10 today. So that is not a light day. That gets us to our old pal, the 30-year. By the way, we are 10 for 10 in terms of contracts that are all expiring in December. So no September or anything else nearer dated sneaking into our top 10 today. We're all going out to the end of the year. Number 10, the 30-year, 375,000 contracts. Number 9 is the NASDAQ E-mini, 386,000 contracts. Number 8, back to the rates, 3-month SOFR, always hanging out in December, 492,000 contracts on the tape for them. Number 7, the Ultra 10-year, 502,000 contracts. So number 7, we're already north of 500,000. So again, that is respectable volume. Number 6, to the 2-year we go, 716,000 contracts on the tape. Number 5, to the land of the micro equities we go, the S&P 500 micro, 766,000 contracts. Number 4, the big dog S&P, 947,000 contracts. Number 3, we're already north of 1 million, 1.17 million for the NASDAQ micro, usually the only thing that could really contest with the 10-year from a volume perspective, even though obviously it's a micro, so a much smaller contract. The number 2 today, the 5-year note, slotting into that number 2 spot, which is interesting. 1.33 million contracts on the tape for them. And then topping our list yet again, nothing can usurp it today, listeners. It's the 10-year note. 1.7 million contracts on the tape already today. Morad, kind of a usual suspects list on our top 10 today. It's pretty much all equities and rates. That's what we usually see. Once in a while, things get a little wild. We see a little WTI sneak in there, maybe some gold, maybe if things are really crazy, some FX. Not quite seeing that today. Anything catching your eye in our top 10 of pretty much rates and equities, sir?
No, it's the usual for me. The NASDAQ micro doesn't cease to surprise, leading the index complex. Remember, the S&P 500 minis were the gorilla, the 800-pound gorilla in the room before the micros came out. And then the NASDAQ very, very quickly rounded third base and has really taken home here with 1.2 million contracts in a day being the leader now. It's just incredible how the smaller product, which is also a micro, is trading a lot more than the S&P 500 minis. It's a new world we live in. So that's always amazing to me. But yeah, the usual suspects, like you said.
Do you find yourself trading more of the NASDAQ micro, or what about the folks at EdgeClear? Are they slinging a lot more NASDAQ these days than maybe even the old S&P?
Yeah, very heavy NASDAQ. This list here, other than, we don't have as much in the notes complex. The NASDAQ, the S&P, crude, GC, RTY, which is the Russell 2000. Those are, the top products for our customers.
Well, I get it. NASDAQ has certainly been leading the charge in terms of movement these days as well. So I certainly get why NASDAQ is topping the volume charts on the equity front out there, listeners. Have you abandoned the E-mini, listeners? Are you heading out to the greener pastures of the NASDAQ out there as well? I'm curious. Hit us up. Let us know as we keep on rolling out to our year-to-date movers. What are the real bangers that have been dominating the tape so far this year, listeners? It's a bit of a wild list, and it continues to be a wild list out here this week, listeners. Let's kick things off. Number 5 to the upside this week. We're going out. I think, Morad, if we just had one theme for this year, it would pretty much just be buy precious and crypto, and I guess we see you next year, right? You're looking pretty good if you did any of that at the start of the year, and that is reflected in our year-to-date movers yet again. Number 5, listeners, it's a P precious, maybe not the one you're thinking of. It's palladium, up 36.1% for the year, listeners. Number 4, the big dog in the metals, it's gold, up a little over 40, about 40.33%. Number 3, it's silver. So silver stealing a march on gold these days, which is interesting. Again, our good buddy Uncle Mike will be happy about that, up 55.25%. Number 2, it's the other P you probably were thinking of. It's platinum, up about 69%. And then once again, I've said this before, our system, for whatever reason, seems to be choking on Ether these days. It's trying to show Ether up 131% for the year. It's had a good year. It is not up 131%. So I'm not sure. Like most platforms have it up somewhere in the ballpark of the 35% range, maybe 40, depending on where you're looking out there. So that would fall within our top 5, just not at the number 1 spot. I don't know what it is about maybe it's the way these futures are rolled that seems to be gumming up our data here. So yeah, Ether, I wish it was up 131%. That'd be a pretty good year.
Mark, if I can throw in here for a second.
Sure, good.
That's actually the exact number of where Ether is versus the low of the year. If you take the low and the high, you'd have 132%. So I'm not sure it has anything to do with the roll, but I'm seeing the swing low to high is about 132% for the year.
That makes more sense. You're right, because at the bottom it was around, sub 1500. So that level, yeah. So that level, that move does sound about right. I'm not sure why it's including that in our list of year-to-date moves. For whatever reason, Ether tends to throw a monkey wrench in our data. It can't handle it. The 24/7 nature of crypto, Morad, it blows up our system out here. But a good year, certainly if you bought the nadir, you're up 131%. You're pretty happy out there, listeners. I don't think ETH bulls are mad at the year so far. I just don't know if they're quite that happy, Morad. 131% to the upside. That'd be a party across the board. All those ETH treasury folks would be having a party. All right, to the downside we go, where there are no parties to be found, listeners. Just dark clouds out there. It's lithium. One of the EMs, maybe not the one you expected, off about 19% so far for the year. Number 4, it's another rough week, and indeed it's been a rough year for rough rice, off 20 1/3%. Number 3, it's cocoa, off about 28% for the year. Number 2, back to the dairy, cash settled butter, off about 36 2/3%. And the big dog to the downside has been dominating the bottom of our tape ever since Ether moved out of that price range that Morad was just talking about. For a long time, Ether was our number 1 loser on the year, which again shows what a wild year it has been. But now it is replaced by good old OJ, off about 47.7%. So again, your breakfast table getting a little bit cheaper. Again, if you want to swap in some OJ for coffee, you're doing all right. If you don't need that caffeine hit. But Morad, anything catching your eye in our year-to-date upside and downside movers, sir?
It's the usual suspects. Some of these, when we're talking about futures, you just got to be careful. I would caution against looking at some products like butter, like the one you mentioned earlier, butter and milk and things like that, because those contracts trade 90 contracts a day or 100 contracts a day. Very, very gappy trade. These are really hedge kind of products. They're not really active products, and I would suggest you don't get yourself involved in that sort of thing. But products like lithium might be one of those. But products like cocoa are pretty actively traded on ICE, and the other ones, the usual suspects, the silver, the ETH, that sort of stuff. You have a pretty good and very, very level playing field with a fair bit of volume if you're looking to experiment. As I always say, futures are not suitable for all investors, but just make sure it's risk capital that you're going in with.
You guys put up a lot of crypto over there at EdgeClear. Is that a big product category for you folks?
It's not huge because, it's competing against so many exchanges and staking and things like that, which you don't get in futures. But the activity is not going to happen in the BTC contract, which is the big CME Bitcoin contract, which is 5 tokens, 5 times $115,000 notional. It's a little heavy. But, you look at products like MBT, the micro ETH, they're pretty active. They can hit 50,000 contracts in a day, and you don't have to worry about spreads. You don't have to worry about a lot of things. And it's just a, plain old futures contract. You can go long, short. A lot of the restrictions aren't there that you would have with a cash crypto product. So they're relatively popular. And also it allows those who are hedging crypto positions to get a little more accurate with something like MBT, which is 1/10 of a coin. You can pretty much put on a hedge that's pretty close to where you are in your wallet, your cash wallet.
Yeah, those micros obviously a lot more palatable for our audience. the 5 Bitcoin. That's for the ETF issuers and those crazy folks out there who need that behemoth-sized contract out there. Well, I want to get your thoughts on the vol space versus metals, our question of the week in a second. But before we get there, Morad, are there any other products that are lighting up your tape this week that we haven't had a chance to get to yet that you want to hit on real quick?
No, you have fantastic coverage. You've hit on pretty much everything that everybody else is looking at and that has good structure and decent volume and opportunity.
We've encapsulated the entire futures market in less than half an hour here. We're not done yet, Morad. We have 2 more we want to hit as we head on into the futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All, the portion of the show you folks get to ask your questions. We also turn our spotlight back on you, and this one, it is very much a question of the week that is relevant to this audience. It's a debate we started having really last week, Morad, even though it's kind of been percolating in the ether for a while. In fact, I think it kind of kicked off on this show a week ago, where we're kind of getting mixed signals out of this market. You just alluded to one of them at the top of the show, which is gold hitting a new all-time high seemingly every day out there, which normally signals, hey, the sky is falling. Things are not exactly great in the overall economy and in the world. And then on the other hand, we have the other more typical measure of that, aka the fair gauge, aka VIX, hanging out in the mid-teens and not really budging. In fact, selling off in a day when the government is actually shut down. So this has caused a lot of consternation for our audience, a lot of consternation for our listeners. We thought we'd put it out to you this week, listeners. Which one right now is the better gauge of market sentiment? Is it gold, which is screaming that the sky is falling, or is it VIX that's telling you, we'll see what happens, but it's not really lighting its hair on fire? Morad, what are your thoughts on this issue? In fact, I was just talking, before you get there, I was talking to our buddy, Mr. Dr. Bix, who will be joining us on Vol Views on Friday. He was beaming in from the Global Volatility Summit in New York this week, and he said they're all debating this exact issue right now. So it is very much top of mind in the vol world. If I had to say right now, gun to your head, Morad, which one are you leaning towards that is a more accurate representation of what's going on right now? Is it gold or is it VIX cash, sir?
Oof, I'm gonna watch my brains hit my brains hit the wall there, because the question is a little tough. What is the better gauge of market sentiment? And my question there is going to be sentiment of what? VIX represents the sentiment for the indices, for stocks, really. That's what it's built on. And it's been kind of sideways on the low side in the mid-teens, which is the home of the VIX, 12 to 18 forever. And it'll spike up to 40 or 60 in some occasions. But to me, the VIX makes sense to me because, what is there that's threatening your long position that you would be overweight on puts in this kind of environment? This thing has, every time it's fallen, when you look at the SPX or whatever, every time it's fallen, it's just been bought up, just like we saw today. It's just there's if it's quiet, it climbs. If it falls off, give it a day or two, and it climbs and it climbs and it climbs and it climbs. And the VIX represents that. Now, gold is a different animal. Gold is a macro product. It's a fundamental product, and it represents money. It represents, because its underlying asset is the dollar, and it's really, gold speaks to more of a fiscal and monetary hedge than it is a hedge against stocks. Now, people conflate the economy with the stock market. Hey, the stock market's making new highs, therefore the economy's great. That's weird. I haven't had a raise in about 3 or 4 years. I'm not seeing that upside that these guys are talking about on CNBC. So those two things it's kind of measuring two different things. For my money, I would say, I want to protect my against inflation is a main concern for me. And for that, I'm going to dollar cost average into the euro and other currencies, gold, silver, platinum. And that's why you're seeing those climbing so well, because gold has become kind of, really nosebleed kind of prices right now in the time that it has taken. So you got to look at silver and platinum as the next place to catch up. They're lagging behind. So gold's more of a representation of what's going on with tariffs, with wars, with monetary policy, with fiscal policy, with government shutdowns. It's measuring some of the anxiety caused by that, whereas the VIX measures anxiety in the stock market and your stock portfolio. I don't mean to bring a different subject to the conversation, but I'm just wanting to be truthful about what these represent to me, in that they're not really a gauge of market sentiment. They're a gauge of market sentiment, specific market sentiments, the stock market versus the macro position of monetary and fiscal policy globally. Two kind of related, but quite different things. I know that's a long answer, but my view would be, if I had gun to my head, I would go gold for sure. I would go metals. I'd go commodities for sure.
No, it makes sense. I mean, obviously they are not designed to reflect the same sentiment, but right now these days they are definitely being viewed in that lens, right? At the end of the day, VIX is pretty simple math. It's just a realized vol of the SPX. And if the SPX ain't moving, VIX is not going to get higher, regardless of where you think it should be. So we've always joked about that on our Vol View show. The actual math for VIX is pretty straightforward. It's just people add on all these other interpretations to it, and they expect it to do things that maybe the underlying math just won't let it do. And we're very much, I think, in that range right now. Meanwhile, we see gold, and you're right, it is a surrogate for many other things out there on the macro front. But one of them is for the rainy day portion of the portfolio. And right now, our audience is leaning that way, Morad. 68.2% saying gold reflects how they're feeling right now better than VIX. That's a good way to put it. They're concerned, right? They're scared. They're a little anxious. And so right now, the VIX is not reflecting that, a.k.a. the fear gauge, not showing them the level of fear that they want, Morad. 31.8% going for VIX. Our chat is split as well. Some folks saying VIX, some folks saying gold. So our audience can't make up their mind, which I guess means we have a good question of the week, Morad. Listeners, if you're intrigued by this debate, not the last time we will talk about this. We will talk about it more, probably on TWIFO tomorrow on the option block. And then, of course, on Vol Views, we will go deep into this as well, some of the data and some of the debates on this topic that are coming out of the Global Volatility Summit this week. Should be a fun one. All right, that music means we've come to the end of another sojourn through the world of futures. Morad, you picked a good one. A lot going on this week. No shortage of topics to talk about on the show. But before we go, sir, if folks are intrigued, maybe they want to talk gold versus VIX with you more, or maybe they just want to check out what EdgeClear has going on. Where should they go? What should they do?
You can reach EdgeClear, of course, through our website, edgeclear.com. You can reach me directly on Twitter or X, Futures Trader 71. I'm also available. Just look up my name, Morad Askar, on LinkedIn. Happy to talk shop anytime. And judging by the results of your poll, I would say that you have a pretty smart audience. They agree with me on gold. So
you can always tell a smart man because he thinks exactly like you, right, Morad?
Yeah, exactly. Exactly.
If you do want to find him on LinkedIn, listeners, it is Morad and then Askar, Askar. Check him out over there. Or just EdgeClear.com, the place to go to kick the tires and light the fire. Speaking of wise folks, the option god in our chat saying gold is the ultimate insurance against global pandemonium. It isn't tied to any single government. So I think we've created a monster, Morad. Our chat is going down the rabbit hole with this, which is always fun. We'll have a lot more data to discuss later this week. That music means we are done for this program, but of course not done on the network. I will be back in about an hour, listeners, to break down all the activity lighting up the options markets today on the Hot Options Report. So make sure you're staying tuned for that. If you're hanging out in the Pro We'll be back in a little bit for that. If you want to join the pro, theoptionsinsider.com/pro. Get you a lot of great exclusives over there and options oddities coming up later this week. Back again tomorrow, of course, with our buddy the Flow Master from SIBO, talking all things flow on the option block. And then back to the sister program of this one. This week in Futures Options, we'll be joined by some fun special guests. I have a feeling this topic will rear its ugly head again, and then we definitely will get into it again on Vol Views on Friday with Dr. Vix and other special guests. Then we wrap up our broadcast week with our pro friends talking unusual activity on options oddities. But we're back again next week, all the way to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.